Hey guys, welcome back to the Road to Retirement series. This is going to be the October 2024 update. As I do in all my videos, I'll walk you through my entire investment portfolio. That includes pensions, ISAs, GIAs, absolutely everything. And it's a good month because I've hit a milestone, which is £400,000 total net worth, which is absolutely fantastic. And I'll walk you through all of that in this video. If you're new to this channel, just a bit of context about myself. So I started actively investing back in December 2021, although I did have a pension since I started working, as it's an auto-enrollment pension. And the goal is really to retire early. Ideally, I'm currently in my early 30s. I'd like to retire at 50, although my goals may change in the future. It's just a baseline to work from. What I do is just show you an update of my investing portfolio every couple of months, and just track my road to that retirement, and talk you through what I'm learning, the changes I'm making, and I'm sure I'll make some mistakes along the way, but I'm here to take you guys on that journey. If you like this content, please consider liking and subscribing, as it really helps the channel grow, and I'm very close to that 1,000 subscriber milestone. So my last update was back in 29th of August 2024, and it's pretty much been 2 months since then. And as we look through these numbers, there have been some significant changes in some of these numbers, and partly because of a couple of good stocks and that the market has been performing very, very well. Let's start off with pension, and remember this is a combined number between me and my partner. So back in 29th of August, the value was 148,771, and this month it is 158,819 pounds, and that's a 7% change in the past 2 months. Pensions are one of the most tax efficient ways to grow and invest your money, and that's why we're investing so heavily in pensions, especially if you're a higher rate taxpayer like myself. You get that 40% tax relief, which is absolutely amazing. And in my last update, I did mention we've upped some of our contributions. So in total, we're probably putting around £2,000 into our pensions every single month. The pensions are made up of purely global index funds, and we purposely chose that because it makes sense for us where we're at in our journey. We've got another 10, 15, 20 years before we retire, so that's plenty of time for us to accumulate that wealth and get the benefits of stocks which are historically more risky than bonds, for example. One recommendation should be understand where your money is in your pension. If you've never logged into your pension account, which I know a lot of people haven't, please do understand where they're putting your money, because just for an example, my partner's company put her into a much safer fund which had a blend of stocks and bonds and other assets, and she quite significantly underperformed the market for the past 5-8 years. Where if she was in a global index fund, should have much higher returns. But luckily, we changed that recently, and since then it's been performing quite well. So definitely understand where your pension is. Next up, we have the Freetrade ISA. And if you haven't checked out some of my other videos, I have a series where I update you on my Freetrade and my Vanguard accounts in much more detail. And you can see a very significant increase in the past 2 months. So it's gone from 112,000 to 151,000, which is a quite significant increase by 35%. So what's the reason for the significant increase? In summary, it's a couple of stocks that are performing exceptionally well and I've been exceptionally lucky with. Mainly number 1, Palantir, and number 2, Rocket Lab. We can head over to my Freetrade ISA to take a quick look, and some of these numbers may not align up because I'm currently showing you this portfolio while we're still in the market trading hours, but you can see some of my top positions here on the right hand side, and the ones that have been performing very well are Palantir, which is my biggest holding. So I've got £81,901 in Palantir, and Rocket Lab is also up 171%, but that value is a little bit lower of 10,325. Taking a look at Palantir share price, it's basically gone up and to the right since the beginning of the year. It's just been performing very, very well without much of a pullback, which is kind of slightly worrying. But Palantir's earnings are very soon, so we'll see how they're performing. But since the kind of last update to today, it's kind of up 40%. So it's performing exceptionally well, and I've got a very large position, so I'm very happy with that. The one thing I am bearing in mind is the ratio of my pension to my ISA. Really, your pension is your most tax efficient way to grow your money, and it should be the bulk of your investment in retirement. In my opinion, again, not financial advice, but you can see my pension is 158,000, and to be honest, between all of my ISAs I have currently, it's 175. So actually, my ISA or the combination of all my ISAs have now outgrown my pension. A general principle is that your ISA should be used as a buffer from the age you retire till the age you can draw down from your pension. So say, for example, I retire at 50, but I can only draw down my pension when I'm 58. Then that is 8 years of income I need until I can start drawing down the pension, which the ISA would fund. So you can make an argument that I should start putting more of my pension and less in my ISA. And I wouldn't say you're necessarily wrong, although bear in mind that my Freetrade ISA has been performing exceptionally well because the stocks I've picked, so I'm up, I think, around £80,000 in unrealized gains. So that kind of distorts the numbers somewhat, but it's something I'm keeping in mind, and especially with the October budget, I'm keeping a very close eye on that. And depending what comes out of that, I may be making some significant changes in my overall portfolio. Moving on, we have my Freetrade GIA, so that's gone from 17,794 to 18,115, so it's up 2%, and that's kind of underperforming the market. Again, I've got individual stocks in that, and unfortunately, they're not performing as well. Enphase, for example, has taken a bit of a hit recently, so it's performing well overall, but just not great in the past month. The Vanguard GIA, this is made up of just the S&P 500, so that's gone from £16,090 to £17,150. If you weren't aware, general investment accounts are taxable accounts, so any profit made from these will be subject to capital gains tax, which is not great, but I did max out my ISAs in previous year, and I had additional money to spend, and I put them in the general investment accounts. These two accounts I'm looking at very closely based on the budget. Say, for example, they raise capital gains tax next year and they're going to reduce the tax relief for high rate taxpayers. Those two I could seriously consider selling and putting straight into my pension. But I'm holding fire right now and being patient and seeing what comes out. And the next update I give, I'll walk you through my thinking and why I made the changes I made. Looking at my shares from my workplace, that's gone from 17,701 to 19,327. That's a 9% difference in the past 2 months. I get great discounts on the shares for the company I work with, so that's why it's grown into quite a large position. I do have conviction in my company. I won't name any names, although at the same time I am conscious that is still quite a large position for a single company. But for the time being, I'm happy with that position and going to continue to let it grow. Next up, we have crypto. So it's gone from 9,891 to 10,902, and crypto's been performing quite well. So it's up 10% in the last 2 months. If you were interested, this is my crypto portfolio. So my portfolio is with Coinbase. And to look at my assets, it's pretty boring, to be honest. I've got the majority of my money in Bitcoin, so over nearly 10,000, and a small amount of Ethereum and some insignificant amounts of some of these other smaller coins. But really, with this crypto, it was just to have a very small position of my portfolio in crypto. And in the future, one day, if it absolutely moons, great. And if not, and if it underperforms, it's not going to have a significant impact on my overall portfolio. Next up, we have the Trading 212 ISA, and this is my spouse's ISA. So that's gone from 1,441 to 2,337. That's a 62% change in the last couple of months. The reason for that is the majority of that gain is just contributions. And yeah, the only thing we're buying in that is the All World Index Fund. So that's ticking along quite nicely. Last but not least, we have my spouse's Vanguard ISA. So she's got £21,648 in this. That's up 2% in the past couple of months. We're not adding to that this year, as we maxed out the previous tax year, and instead we're putting money in the Trading 212 ISA instead. So that gives us a grand total of £400,165. And yeah, extremely happy with how this portfolio is growing. I am conscious that we've had a very, very good year. Extraordinary market conditions. It was a great recovery. And I'm so glad when I was buying things when they were significantly discounted, especially after COVID. So I think I got in a pretty good time. I'm not expecting these sort of gains going forward. As with the market, there's going to be dips and there's going to be recoveries. And my plan is just to kind of continue investing even more heavily in the dips. And in the long run, that should pay off quite well. Taking a quick look at the percentage rule table at the bottom. So there was a famous 4% rule, and I've talked about this in much more detail in my previous video, so check that out. But it's essentially the amount you can take out every single month and not run out of money till you die, which is also an unknown. So that 4% rule puts me currently at £6,006. I can take it every single year. Or if I wanted to be a bit more stringent, where I expect to live longer than I initially thought, or I want to spend more money than I initially thought, that gives you a bit more of a buffer. And the 3% puts me at £12,004. Or the opposite end, you could take the 5% rule, that would be £20,008. So it's quite a significant change depending on what percentage you take. Overall, I'm very happy with how things are going. I mean, just going from August 23 to October 24, I've essentially doubled my portfolio. And again, that's mainly due to how well the market's performing, and that's not going to happen every single year till I retire. So I'm grateful, but I'm also hoping for some opportunities in the market where hopefully we get a bit of a pullback. I've got some cash on the sidelines I want to deploy, and those dips are great opportunities to deploy that cash. The main thing for me is what changes am I going to make based on the budget? And again, there are lots of rumors and lots of things people think are going to happen, but I'm going to wait for it to come out, take a good look, do my research, and I'll probably make some changes to this portfolio, specifically the general investment accounts, which again are taxable accounts. I'm highly likely to redeploy that money elsewhere, but I'll cover all of that in my next update. So that's going to be it for this video. Hope you guys found it useful, entertaining, and I'll catch you in the next update video.